Welcome back to Talk Property to Me. My name is Brad East.
And I'm Aaron Downie. Today we're going to be diving into the topic of Perth. It's a pretty controversial one at the moment, so it's worth unpacking.
There's obviously a lot of talk in the market at the moment, especially with investors, that Perth is the go-to. I guess what we want to look at today is, some of those reasons why people are firstly thinking that it's, the best investing place at the moment. And we're also going to have a look at, the local economy the state economy versus the Australian economy and see where that sits. And then we're going to also look at how the property market has performed, over the last 20 or so years.
Yeah.
And really unpack as to why, in my opinion, and this is controversial, in my opinion, Perth isn't the place to be investing in 2024.
Correct.
So we'll get started by firstly getting into the numbers. That's my domain, all the boring stuff. But the best way to put it in perspective for Perth is to have a look at the Australian economy as a whole, and then compare that to where Perth sits or where WA sits. So on a whole in Australia, mining sits at about 14.3% of the Australian economy. So it's not a majority, it is probably the biggest sector though. Finance sits at 7.4, education 12.8, construction 7.1, manufacturing 5.7. Now, remember that number, 14.3.
I'm surprised agriculture's not there, but
yeah, it's obviously
this
is just a bit of a snapshot from the RBA as to some of those numbers. So if we look at state output in our overall, so WA has a contribution to the overall economy of 17.4%, South Australia 5.5%, Queensland 19.7%, New South Wales 30.3%, Victoria 22.2%, and poor little Tasmania 1.6%.
Not surprising.
I think they have some good whiskies down there. I think that contributes to their economy, I guess. Now we look at population. I'm just going to run through these numbers because it's interesting stuff. But population in Australia at the moment is 26.8 million, and we had an annual growth of 2.5%. And this is a snapshot to May in 2024. So basically, we look at those numbers. We look at the mining sector on a whole. So all of Australia at 14.3, and then we compare that to other states, and the big standout to me is the fact that the mining contributes 59% of the the Western Australian economy.
Yeah, 59%, that's massive.
Well, it's huge. You compare that to that 14.3% as a whole in Australia versus 59%. So what that says to me is you have a local economy that is very linked to iron ore prices, all those prices, and what's happening in the mining sector will really dictate how many people need to live in that market.
Yeah,
you start to strip that out. Let's say for some reason the demand for the mining and the resources in that area are really stripped out. What's going to happen to the demand in that area for housing? Yeah. There's no work all of a sudden.
Exactly, and I think. Another stat we could go off here to support that the mining industry. So for overall incomes, we know that incomes dictate house prices all over Australia.
Correct.
But if we look at the actual mining sector or the average income per capita for the state of WA, mining is the biggest one, which is $2,400 per week.
Yep. So there's no surprise that mining jobs pay more.
Yeah,
they do pay a lot, and when you've got 59% of your, local economy is reliant on that strips a lot of income out of that market if those jobs are lost.
Yeah, correct.
All of a sudden, people are back in construction or doing those things that they did before they went into the mines, and it lowers, and as you said, incomes dictate property prices. You strip $1,000 a week out of these average incomes in WA, what happens to the prices?
Yeah. Property prices go down, demand goes out of the market, rental yields go up.
vacancy rates.
Yeah.
And so that's I guess my biggest concerns with investing in the WA market is it is still very, very reliant on mining.
It's relying on a single industry.
Yeah, and 59%. It's not a small amount. Like, we're not talking 20%.
Yeah. I think, one of the biggest things, it's quite a shocking graph, and we'll upload it into the show notes, is the fact that after the dot-com bubble in 2000, the Perth market grew by 70%, and it reached a peak in 2005. It then fell again at 2015, and there's a direct correlation there with iron ore prices and with vacancy rates going up in that market then as well. But we've just returned back to 2005 levels in the Perth market.
So, 19 years later?
19 years.
So you think about that, all the listeners. If I propose to you that you buy some shares or a certain product that is worth exactly what it was worth 19 years ago today, would you buy it just because it's affordable?
And I think it's hard to look at things such long term, but we've said it before, history is a good indicator of the future. And I think, it's quite subjective when you sit here and talk about, mining being the dominant industry in a certain economy. But when you look at the actual numbers, and when you see Sydney, Melbourne, Brisbane, Hobart, Adelaide, all of the other capitals, they've showed consistent upward trends over the last, 50 odd years compared to Perth. It just goes to show what that industry is like. And I think, again, if we can try and put it into perspective, like what you just said there, Brad, we all know that interest rates is a big factor for investing in real estate, or not just investing in the real estate market in general. So the fact that we've had historically low interest rates for the last couple of years, we all seen what happened Australia-wide to the property market because of historical low interest rates. And the fact that Perth didn't grow during that time
is a concern, isn't it?
It's a pretty big concern.
When you look at like areas of Sydney went up 20%.
Yeah. Narrabeen on the northern beaches after COVID from 2020 to 2022 grew by 136%.
It's mental. Don't hate me, but I'm a Manly Seagulls supporter, so lovely area. But it's nuts, absolutely nuts.
Yeah.
When you break it down and you remove the emotion from, I guess, the overall picture, it's not a great investment on paper.
It's not.
It's very crystal ball stuff for me. It's sort of here's some numbers that I've manipulated to suit myself, and these are the reasons why I think Perth are going to do well. Let's ignore history, and let's ignore all the numbers that, like I guess the iron ore prices have affected the property market, which is very clear, which we will upload some of those graphs, and you can literally see it's an opposite. Yeah. Iron ore prices go up, property prices go up with it in that local market, and vice versa. You remove all the emotion out of that and you look at it on paper, it's not a great investment, in my opinion. No. There is much better places to be investing that are more secure and more safe. You look at, I think the main reason people are investing in Perth and WA in general is affordability.
The affordability crisis. That's simply it.
Yeah. And again, you look at that, I'm relating back to shares again, but do you buy an affordable share that hasn't performed over the last 19 years?
You buy Apple, you buy Tesla, you buy all of
Or do you buy something that, is more expensive, but you buy less of, that's going to perform better?
Exactly.
Exactly. Sorry to break it down into real simple terms, but that's
what it is.
Yeah. You buy less of something that's going to perform better. And I think that's the thing where people are getting caught up here is they're going, I want to buy a $500,000 investment property. And they're going, all right, the only place that I can buy a $500,000 investment property at the moment is in Perth.
Yeah. and it's just simply not true. You're best off buying a 2-bedroom or a 1-bedroom unit
Yep.
in Newcastle or in a, there's so much talk about people buying outside of our local New South Wales economy, and there's fair enough. There's growth in all states, in all suburbs, but you don't have to invest outside of your backyard.
Yep.
We've got great investments locally, and if you actually look at Proverbs specific, so that's I just wanted to say that Perth, although we sit here and we throw Perth under the bus with all of these statistics, I'm sure there's some markets in Perth that have grown because there's sub-markets in every market.
Oh, for sure. You look at it, we're looking on it at a very big scale.
Yeah, yeah.
You look at Newcastle as a scale, you've got some suburbs that have done really well, some that haven't.
Yeah. And in Newcastle as well, and Perth is very much the same. There's been suburbs in Newcastle that have grown much better than other suburbs, but every investment's for a different reason.
Yeah.
Are you investing to put a granny flat in the backyard? Are you investing to put for just simply capital appreciation? Do you need a rental? Do you need a investment property that's going to cover your mortgage each week? It's not just about investing in a certain market. It's what you actually want to achieve with that investment.
So you mentioned as well, sorry, I guess the naughty word in a lot of investors is units and apartments. Do you want to unpack that a little bit more for me as to, you hear a lot of people, I guess, in the market saying, and there is an element of truth to it, land goes up, buildings depreciate.
Mm-hmm.
Have you seen, I guess, numbers around that, or have you got numbers around that on people buying units versus apartments and still doing well? Units versus houses and still doing well out of it?
From personal experience, yeah. So I think I mentioned last time on the pod, my first investment was $280,000 unit in Charlestown.
Yeah.
And I doubled my money in 5 years.
Yeah.
So, it is true, land does appreciate. So we can just generalize that and say that, well, houses are going to perform better. But the same data translates into strata titled properties as well. And I think people need to actually familiarise themselves the difference with land or a strata titled complex. A strata titled lot is an individual title on that block of land.
Whole lot.
And on the whole lot.
Yeah.
So you still own a portion of that land and that will appreciate. But then you need to look at the other data that's involved as well. And one of the biggest ones is supply and demand in that market.
Yeah.
So I think it's a pretty myopic approach to just generalising and saying that land appreciates, so that's a superior asset class. There's a lot more demand in the market for units at the moment, all across New South Wales. And that's simply because of that affordability issue as well.
100%. And you've got to break it down into, you can't generalise, in my opinion, and say all units are off the card, off the cards. We're just going to exclude those. It has to be linked to what your long-term goal is, or even your short-term goals. I've got plenty of clients that over the years have purchased in Newcastle, Honeysuckle, in those sort of areas that generally aren't great. No one's going to really spruik them as a great investment, but they're great for a first home buyer to buy, and then they release equity and go buy a house in later years, and then they've got an investment unit in that area.
Yeah.
There's nothing wrong with doing something like that, in my opinion. So, yeah, interesting views.
There's a lot in it. Like it's holding costs. So it's what are you going to do with the
yields?
Yeah.
I guess there's an argument, when you break it down, would you prefer let's say a $600,000 5-bedder in Perth or a 1-bedder in Vaucluse? What's going to perform better over a 20-year period?
Yeah. Yeah. I've actually got a pretty top of mind property when we talk about this. So we were representing a client a few years ago investing in Newcastle. They were from Sydney.
Yep.
And they were completely sold on purchasing a house as opposed to a unit. And that's, that was just a bias that they held. So that's essentially why they pushed towards buying a house. We were actually trying to push them towards a 2-bedroom unit in the Junction. And we could have purchased that for $680,000. It was around 2 years ago.
Yeah.
We ended up purchasing out in Cameron Park, I believe it was.
So housing estate.
Housing estate. Because they wanted the rental yield, they wanted the depreciation on the property, and they thought that the land was going to appreciate much, much faster than the unit. Cameron Park is still where it was 2 years ago, and there's another unit in that same complex now that's selling for $800,000. That's been over a 2-year period where interest rates, what have we had, 14 interest rate hikes?
It's gone up, yeah.
And
a lot
that unit itself has still grown over that period.
Yeah. So it's hard to generalise and say avoid units at all costs.
Yeah.
It has to be unpacked and looked at in a local area. What market are you going to? You're not going to buy a unit in a housing commission area.
No.
You're looking at high growth areas because then you take advantage of the market growth, not just the, land as such.
Exactly.
Because as prices go up in an area, it drags the unit prices up with it.
I think there's a really good graph here, and we can upload this in the show notes. So this is Newcastle over the past decade. Bar Beach has grown by 417% as opposed to Hamilton East of 156%. So, 260 odd % difference in growth. Hamilton East, that's still spectacular growth, by the way.
That's great.
156% over 10 years, that's great growth. But if you actually compare it to Bar Beach, which grew by 417%, I can guarantee anyone would have taken a unit that's going to grow 417% over a house that's grown by 156%.
Yeah, and that's suburb growth too, isn't it?
That's suburb growth.
Yeah, and Bar Beach does have a lot of units.
Yeah.
So very interesting stats. So I guess if we summarise over, the Western Australian / Perth market, again, my biggest concern is the reliance on mining. Again, that's sitting at around 59% of the local economy there, which is huge. It's like 3.5 times the Australian average, which is massive. That drops, incomes drop, demand for housing in that area drops. All of a sudden your $500,000-$600,000 investment property is sitting vacant.
Yeah.
I don't know. I have big concerns with that area. And I also have concerns. Another thing that I got told a long time ago was if everyone's talking about an investment, it's too late.
It's too late. There were people investing in Brisbane before the Olympics were announced.
Yeah.
The Olympics were announced and everybody started throwing their money at that market. If there's that many investment properties being purchased in a local market, what's going to happen to vacancy rates?
Yep. It's not going to be like this at all, like forever, you know what I mean?
No.
There is always ups, there's always downs. So people need to mitigate their risk by looking at how big that down could be. When you look at Perth over that 19-year or 20-year period, you said it went up 70%. But now 19 years later, it's still only the same.
It just recovered to its
So it's dropped more than 70% out of the arse of it in that time as well.
Exactly.
So what goes up must come down, but how far is that going to come down how far it comes down is very reliant on that economy. Is there other sectors that will prop it up? Some of these sectors which we were looking at before, one of the biggest sectors around all of Australia was it transport and warehousing, so the logistics chain. That was quite small in WA, but it's massive around the rest of Australia.
Yeah.
Obviously smaller in WA because who's going to get something shipped to Perth and delivered to Sydney?
Yeah, exactly.
That is why it's less.
Very isolated out there.
Correct, and that's why their major economy is propped up by mining because they mine it in that state, they ship it from that state, off it goes. So, yeah, look, East Coast, South, east coast of Australia and even across the south, to me, is a more logical investing location.
East coast of Australia. There's some great investments in South Australia, and I'm surprised a lot more people aren't putting their money down there.
I actually really like Adelaide.
Yeah.
I spent a lot of time in Glenelg over the last few years just for work and
Yeah.
going down there, and it's a beautiful spot.
600K will get you a 3-4 better.
Yeah, there you go. There's your hot tip. take Perth out of your search criteria and start looking in more affordable places like Adelaide or Newcastle.
Yeah, there's plenty. I think one of the good things to take away from this, or anybody can take away who's listening, is look for markets that have had that consistent long-term growth, that aren't reliant and aren't dictated by the macroeconomic factors. We can sit here and look at Newcastle, and a lot of the market's vacancy rates aren't at those ridiculously low levels of 0.3%, which is what Perth is at the moment. But Newcastle has had consistent 1 to 2% vacancy rates for the last 20 years.
And Newcastle's also recovered very well from being reliant on one industry as well.
Correct.
It was, sure it's probably common knowledge, but the BHP was the major economic driver in Newcastle for a long, long time, especially during the war eras. Post-war, it did wind right down. There was a lot of unemployment in the market, I think in the 80s, 80s and 90s, but that has washed right out, and we have such a strong professional related economy in Newcastle now.
We're getting overflow from Sydney from the affordability issues. We've got the lifestyle amenities close to the beach. We've got
you look at some of the bigger insurers, Suncorp. They've got a call centre here.
Moving up here.
There's a lot of big companies moving to Newcastle.
Yeah.
Just because of the affordability for their staff.
Yeah.
They can get better staff up here.
Yeah.
That don't want to travel from Campbelltown into the city. That sort of stuff. So again, summarising. Look, we might be proven wrong in 10 years. People might listen back to this podcast and go, "You're idiots, they knew nothing." But based on the numbers you have in front of you right now, I don't think it's a great investment.
I think people will be shocked when they see that inverse relationship with
vacancy
iron ore rates, property prices in Perth, and vacancy rates. They all correlate. Like I was saying there before, with the consistent vacancy rates and property growth in certain markets. The peak of vacancy rates in Perth got to 5.8%, which was when the lowest iron ore prices were.
You can't deny the link.
Who wants to own an investment property that has 0.8% vacancy rates?
Yep. You can't deny the link. There's people listening swearing at their stereo right now or whatever, but it is a link.
I just bought in Perth.
Yes, exactly. But that's it for today. As always, jump in the Facebook group, jump on the Instagram, TikTok, all those things, and follow it. If you have any questions or you want any topics covered in any of the podcasts, hit us up, send us a message, or jump in the Facebook group. Happy to dive deep on any of the topics that you want us to.
Awesome.
So thanks for joining. Thank you.